Good morning. Good morning. Good morning. Good morning. Hi, Karthikeyan. Hi, Anuj, Abhishek, Anirudh, Avinash Sawant, Abhishek Atari, Birendra Jain, Devendra, Triman, Dipalok, Ish Puri, Jitendra, Phule, Kiran, Madhuri, Makran, Mikhail, Pranay, Ramji, Rashmi, Sachin, Samir, Sangeeta, Pushpanjali. Welcome. Sachin Saxena. Hi. All right, so let's go uh, into the part 4 of this session on liquidity. Okay, so we have looked at what is liquidity, what are the various ways through which RBI, the central bank, controls liquidity. And today we are going to go deep into seeing what is the interlinkage between Indian local market liquidity with the global liquidity. And to what extent, what are the various ways it impacts the local liquidity in India. All right. So let's go deep into it. All right. Give me just yes. So perfect. You can there might be some small hindrance to the Wi-Fi. I was told there could be some problem in the Wi-Fi today, but till the time, as long as you can hear me clearly, I think it is working fine. It's working fine. All right. ठीक है. चलो. So tell me how many times, how many times you have seen that that Indian equity markets fall sharply, and immediately people start saying कि boss India में कुछ problem है. But what if I told you that many times that Indian markets fall for reasons that have nothing directly to do with the Indian macro and Indian economic conditions? Think carefully. Sometimes the decision taken by US Federal Reserve has a bearing on Indian local markets. Okay. But why should a decision taken by US Federal Reserve sitting like thousands of kilometers away affect your client portfolios in India? Why should the US bond yields matter to Indian equities? And why should the dollar becoming stronger suddenly can create pressure on emerging markets? But it happens, right? हम लोग सुबह न्यूज़पेपर खोल के चेक करते हैं कि बॉस रुपी कितना डिप्रिशिएट हुआ या अप्रिशिएट हुआ या डॉलर इंडेक्स स्ट्रेंथन हो रहा है वीकन हो रहा है and it happens again and again. Okay, why does it happen? And sometimes this is the space where many MFDs unknowingly operate with an incomplete vision. हम लोग एनालाइज करते रहते हैं कंपनी रिजल्ट्स जीडीपी इलेक्शन लोकल न्यूज but unfortunately we sometimes ignore the global liquidity movement, right? Correct. Yes, all of you are right. Indian central bank holds US bond yields. And the smart money tracks this global liquidity obsessively because they understand one brutal truth. Markets do not move only on local fundamentals. They move on global capital flows. And when global money becomes cheap, risk-taking increases at a global level. FIIs pour money into emerging markets, valuations rise, optimism also spreads, and so on. Now, let's reverse the situation. Imagine what happens when US yield starts to rise or the dollar strengthens. Suddenly, the same global money starts moving out and Indian market starts to feel the pressure immediately. Now, I would request you to think deeply about this. Many times, FIIs are not buying India because India you know, is nothing very magical. They are allocating global liquidity. Remember, FIIs are not buying because India is some like magical country. There would be economies with equal and stronger and higher per capita income and more deeper capital markets and so on. It is just about allocating global liquidity. For them, also, it is a global asset allocation. So today's session is about seeing that invisible layer which affects the Indian markets. Okay. That global money movement that quietly shapes the valuations, FII flows, and so on. Okay. So let's try to understand the effect of global liquidity, and we will stop thinking like a local investor. All right. Shall we begin? Ready? Super. All right. Just give me a minute. I'm going to look at the presentation and see if it is ready. Yes, global liquidity presentation is ready. I'm going to download that and we are going to start. Correct. The invisible force, the global liquidity current. Okay. Uh, all right. Local fundamentals do not always explain the market reality. Okay. Sometimes, there could be no major domestic crisis, no dramatic economic events. We have got a strong GDP number, but still the FII starts to sell heavily. Or the volatility, because of that, the volatility suddenly, gallops, moves higher, and the market starts to correct sharply. ये होता है. The question is, why does it happen? कि इंडिया में कुछ भी चेंज नहीं हुआ, but suddenly the FIS start to sell heavily, volatility उसके कारण बढ़ जाता है, and market पे correction शुरू हो जाता है. FIIs allocate global liquidity for their portfolios. वो जब investments करने आता है इंडिया में, they are just not looking at India alone. They're looking at India, they're looking at Indonesia, they're looking at Malaysia, they're looking at Taiwan, they're looking at Japan. They're looking at all these emerging markets, excluding Japan, and in entirety. They're looking at Sri Lanka. They're looking at all these markets. It's a global allocation of liquidity. Now, the thing is this, they're not moving this money exclusively because of India growth story. The reality is a bigger portion, a massive portion of the FII money moves entirely dependent on global liquidity conditions. Indian markets react to these movements. Okay. Now, there are three interconnected gears of this global capital flows. Number one, what is the Federal Reserve's rates, stance on interest rates, and the level of the federal Fed rate? Okay. That affects the US bond yields. And that affects how the US dollar is going to move. So the US Federal Reserve's stance and level of the Fed rate affecting the US bond yields, eventually affecting the strength of the US dollar. All of these three things are all interconnected and they are impacting the global liquidity. They are working as a unified mechanism, and that dictates the overall capital flow into emerging markets. Okay. Now, how does this happen? Let's imagine US Federal Reserve reduces interest rates. I'll go a little slowly today because for many, it might be a little technical. Okay. So I'll go a little slowly today. The US Federal Reserve, let's imagine, has reduced interest rates. Okay. Now, because of that, the dollar liquidity increases. बिकॉज इंडिया में भी देखा है इंटरेस्ट रेट नीचे आता है तो मनी एक्सपेंड्स करता है. इफ डॉलर लिक्विडिटी इंक्रीजेस, global money becomes cheaper, correct? And if global money becomes cheaper, all that money which is looking for yields across the globe, जहां जहां हायर यील्ड है, अगर श्रीलंका में 8% है, इंडिया में 6% है, तो पैसा श्रीलंका में पहले जाएगा. अगर मलेशिया में 5% है, इंडिया में 6% है, तो पैसा इंडिया में आ सकता है. बट ऑब्वियसली इंडिया का रेटिंग, क्रेडिट रेटिंग देख के एंड ऑल ऑफ दोस थिंग्स विल बी डिटरमाइनिंग. But money will keep looking for higher yielding assets. Okay. And since Indian yields are relatively attractive, there would be money which would flow into India as well. Okay. Now, on the other hand, suppose the US Federal Reserve raises interest rates. In that situation, US bonds becomes highly attractive, yields ऊपर चढ़ जाएगा. उनका 4% yield धीरे धीरे 4.25, 4.5 भी हो सकता है. Now, as yields go up, money will move out of risky assets. US equity से पैसा निकलेगा. And capital will also, because US yields are attractive, because US bond yields are the most safest assets to hold. With a AAA country, priced in dollar, you are getting a higher yield. तो आपका natural, inclination होगा to buy those kind of assets. So money is going to move out of all emerging markets into those asset classes, including India. And then capital will move out of India. Okay. Now, this is a competition that Indian markets are continuously fighting every single day. Now, the dollar operates as the ultimate global risk as a meter. There are two ways. Either the dollar becomes weak or the dollar becomes strong. And DXY is an indicator. Dollar strength, dollar weakness, dollar index बोलते हैं. अगर strong dollar है, okay, then FIIs will become very cautious because dollar is strong. So people will try to move into stronger assets. So people will move into dollar assets. Emerging market से पैसा निकलेगा. अगर डॉलर स्ट्रांग हो जाएगा, ऑयल इज प्राइस्ड इन डॉलर, सो इन्फ्लेशन का वरी रहेगा, जो आज के तारीख पे चल रहा है. डॉलर इज गेटिंग स्ट्रॉन्गर, रुपी इज गेटिंग वीकर, ऑयल प्राइसेस आर गोइंग अप, इन्फ्लेशन इज अ वरी इन इंडिया. So this is a classic situation that India is going through right now. The opposite of that is a weaker dollar. A weak dollar will encourage all kinds of investments at a global level. Because dollar is getting weak, people will look to get out of dollar assets and money will start to move into non-dollar assets, including India. Okay. So remember, dollar is just not a currency. It is considered as a reserve currency. It is also working as an asset for many people. People like to store their wealth in the form of dollars. Now, rising bond yields is silently competing with Indian equities. So suppose US 10-year yield is going higher. Okay. Now, when US 10-year yield rises sharply, global investors can suddenly earn much higher returns from US assets. Perfect. So the people will start, all the investors will start to think, because US में अगर interest rates superior मिल रहा है on a risk adjusted basis, that also in dollar, then why should I invest into other assets like equity, and why equity of India? Okay. Result क्या होगा? FIs will start selling. Valuations will be under pressure. Okay. India, India is the single node. क्या होता है? देखो, markets sometimes fall not because India becomes weak, but because global money becomes fearful. Global money rotates continuously. कुछ कहीं ने वो रुकेगा नहीं, वो continuous move करते रहेगा. Because as we are also continuously selling underperforming stocks to move into superior performing stocks, global liquidity is also looking for superior assets across the globe. कभी वो commodities में जाएगा, कभी cash में जाएगा, कभी equities में जाएगा, bonds में जाएगा, या emerging market जाएगा. So this money is continuously moving throughout the system, and India is just one of the nodes in this system. Global liquidity definitely alters investor behavior. Okay. Now, either the level of liquidity goes higher. If the level of liquidity goes higher, then it's reversed to volatility. But अगर liquidity कम होगा, volatility बढ़ सकता है. So the phase one, as liquidity tightens, investors' risk appetite collapses suddenly. Okay, capital preservation and safety becomes an absolute priority, and volatility starts to rise across all kinds of global markets. Now, when FIIs sell heavily, okay, the big question is this happening because of India's economic weakness or something else? If the answer is no, then it is definitely because of global bond yields are rising. US dollar is strengthening. Okay. India sometimes just becomes a collateral damage to the macroeconomic situations. Might not be something because of our own situation, because of global situations. Okay. The global liquidity allows, the domestic flows actually provide a buffer. Okay. Sometimes क्या होता है, FIIs are selling in the market, the domestic investors are continuously buying. Okay. So record domestic SIP inflows, continuous DII supports provide a lot of support to the volatility created by global liquidities inflows and outflows. When these kind of news hits the market, try and improve your vocabulary, the way you're conversing with the client. The amateurish ways are all about FIs are selling, dollar got very strong, markets are looking incredibly weak. But try to elevate your vocab. Global risk conditions are tightening. Global capital is migrating towards safety. Rising global yields are pressurizing emerging markets valuations. Okay. Try to elevate the conversation as you go ahead in your journey. Remember, Indian markets may look strictly local on the surface, but the capital flows driving them are mostly global. It's a combination of what is happening to local liquidity and global liquidity combined. And many times, the biggest force moving Indian markets is not what is inside India at all. It is because of what is happening in the global markets. Because financial markets are all interconnected. What is happening there will be affecting Indian markets here. All the best, everyone. Have a great day ahead, and I'll see you tomorrow exactly at 10:10. All the best. Bye-bye.